On Business Incorporated today, Nigeria opens export trade house in Honghu province in China. And dollar-only stock market in Zimbabwe soars 75%. Ghana economy expands by 3.1% in 2022. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. We head straight to the market as usual, where we see a bit of good news building on the positive sentiment that the NGX closed with yesterday. We see the market at intraday at 0.06%. That's it. But we're still at 51,000. So I guess we're still on a very shaky ground when you talk of the NGX. In South Africa, it's deeply in the red, 1.24% in the red there, 78,308. And we look at other parts of the continent. Now, Egypt, the EGX 30 is almost 0.5% down, and it's at 17,464.18, while Kenya closed Tuesday 0.46%, almost 0.5% in the red for Tuesday. We move to the Middle East now. We see it's mostly negative there also. Abu Dhabi is 0.58% down, 9,581.93. Dubai follows suit, takes the drop even further, 0.90% at 3,480.05. Looking at others now, Saudi Arabia is closed today. We're yet to get the real reason why Saudi Arabia is not trading today, but we see that it closed in the negative 1.19%, and Qatar as intraday 0.41% in the red, 9,911.50. Well, in Berlin, summer is approaching in the Northern Hemisphere, and the airline industry in Europe is afraid that a spike in strikes could mean another season of delays during this crucial travel period. And that's after delays and cancellation headaches over the Easter holiday. It wasn't a very pleasant one for them. But why are we talking about this now? We have Cassandra Sant joining us to give us the details. Good afternoon, Cassandra. What happened exactly that has gotten airlines worried and bringing up this conversation at this time?
Thanks for having me. So, new data out from the week surrounding the Easter holiday shows that there was a distinct jump in cancellations and delays of over 3 hours in Europe. Now, those issues were up over the 2022 and 2019 figures. Folks may remember that last summer was a disaster for airports in Europe, with hours-long queues just to get through security and border controls, especially at some of these big international hubs. So, airlines are really hoping to avoid a repeat this year, but now strikes across Europe are presenting a new challenge. Now, the strikes in Paris over pension reforms have garnered international attention, but it's also driven down bookings to that city. Plus, that Easter weekend delay and cancellation data also showed that both France and Britain led the pack with those sorts of problems. Looking at these figures, in total, 9,000 flights were delayed by more than 3 hours. Compare that to 6,800 last year. But the big figure was the cancellations. 33,000 canceled flights this year over the Easter weekend holiday. Compare that to 7,800 cancellations last year. So a huge difference.
Very huge there, Cassandra. And looking at the fact that the weather was even good, I mean, not as bad as expected. But you mentioned France there. Where are delays expected in France?
So, part of the problem here is that the strikes in response to this new law in France aren't just affecting services on the ground, but also services in the air. If you're a traveler going from, say, London in the UK to Barcelona in Spain, that's essentially a straight north-south line. But what's in between? France. And now executives are realizing that airline strikes in France are blocking many flights over French airspace. So even if folks are headed elsewhere in Europe or from elsewhere in Europe, their travel could be affected. Meanwhile, smaller strikes have been popping up in Germany over the last few months, with cancellations following suit. This week, a major union is calling for a strike by security control workers. Hamburg Airport has already canceled all departures on Thursday and Friday. 2 other airports in Germany could also be affected by the strikes.
Yeah, well, talking about the world being a global village, but how are the markets looking at the opening?
Well, British airline EasyJet has seemed to shrug off all of this doom and gloom, the company lifting its annual profit forecast for the second time this year. Now, apparently, holidaymakers are so far, shrugging off some of this uncertainty, and that new forecast news sent share prices soaring by 1.6% yesterday. But stepping back and looking at broader investor sentiment, European shares fell on today's opening. The Pan-European Stock 600 fell by 0.2%, with the rate-sensitive real estate and tech shares down 1.6 and 1.7% respectively. Investors are scrutinizing UK inflation data and corporate earnings, and were jittery ahead of the release of Eurozone March inflation data. After all, how inflation looks in the bloc has a big impact on which path the European Central Bank will take in terms of monetary tightening.
All right, thank you so much, Cassandra, for giving us updates from Europe there. Enjoy the rest of your day. We move over to the UK now, where Britain's National Cyber Security Centre has released a disturbing observation that Russian hackers aim to attack key infrastructure. I wonder what this is about, but we have Tenny there. Tenny, hi, good afternoon. What's this about, attack from Russia hackers?
Good afternoon, Inni. So those comments you mentioned were made at the Cyber UK conference happening today. Essentially, the UK National Cybersecurity Centre is warning that hackers linked to Russia have started to target Britain with the intent of destroying critical infrastructure. And they're doing this by attacking businesses working, of course, in critical national infrastructure. According to the Cabinet Minister, Oliver Dowden, the groups behind these attacks are more ideologically motivated rather than financially motivated. He also described them as often sympathetic to Russia's invasion in Ukraine, which he says makes them even more dangerous and less predictable. But in order to protect these businesses from these cybersecurity, the Cybersecurity Centre has now issued an official threat notice, and officials have recommended that organisations such as those behind the UK's energy and water supplies put in place measures to protect themselves against the emerging cyber threat.
Measures are effective enough to protect the businesses and, of course, the people and the government at the end of the day. But let's look at the markets now. Is it looking bright today?
Well, the markets, the all-share index is down by 0.44%. After the UK inflation data for March failed to drop below double digits, the FTSE 100 has also taken a step back after an 8-day winning streak today, down by 0.40%. Those figures have also had a significant impact on the domestic market. The FTSE 250 is also down by 0.69%. In the currencies market, the inflation data initially sent the British pound as much as 0.8% higher against the dollar, but it has eased down 0.03% against the US dollar at intraday. Despite that, the British pound is trading up against the euro by 0.34%, and it's also trading up against the Japanese yen by 0.59%, Inni.
Thank you so much, Taniola. Take care of yourself. Enjoy the rest of the day.
Thanks.
All right, let's move to other markets now. Asia Pacific market traded mixed on Wednesday as Wall Street's earnings season continued, and U.S. Federal Reserve officials delivered mixed signals on future rate hikes. Atlanta Federal Reserve President Raphael Bostic told CNBC that it sees one rate hike of 25 basis points before pausing to say its impact on the economy, and this will take the U.S. Federal Reserve's fund rate to 5%, from 5% to 5.25%. Let's look at the numbers right there now. For Asia, we have the Australia AX 200 at 0.07% in the green, the K225 0.18% in the red, and the Kospi 0.16% in the green. And the Hang Seng Index is deeply in the red at 1.37%, and the Shanghai Composite at 0.68% in the red. In the United States, stock futures are down as investors digest latest earnings. Stock futures tick down as traders weigh the latest round of earnings and sticky inflation globally. Futures tied to Dow Jones Industrial Average lost 0.5%. S&P 500 also down. Nasdaq also down. But let's take a closer look at how the market traded on Tuesday with our correspondent in Washington, D.C., Maria Bird.
The U.S. stock market wavered on Tuesday as the Dow Jones was down by 0.03%. The Nasdaq was also down at 0.04%, but the S&P 500 was up by 0.09%. Many investors are watching to see if this will be a trend for the rest of the week. It is also clear that investors are watching to see what will happen with the earnings reports, as some banks, like Bank of America, have already found that they exceeded their targets that they expected. This is mostly due to the fact that interest rates are higher and personal loans are higher, which created greater gains for the company. Companies, though, like Goldman Sachs did not meet their targets. This is mostly due to the fact that many deals were not made during the first quarter.
Thank you, Maria. Just before we leave the market, let's head to Zimbabwe, where we see that the combined value of companies traded on Zimbabwe's alternative dollar-only stock market has soared by 75% this year as investors take shelter from the rapid depreciation of the local currency. The market capitalization of the Victoria Falls Exchange has climbed to almost $1 billion, according to FBC Securities, which is a brokerage base in Harare. Companies are drawn to the Boston, the resort city, because of broader sources of capital, tax incentives, and better positioning for their brands. To date, there are 10 counters trading their shares on the Waterfall Bourse. These include African Sun, Axia Corporation, Bindura Nickel Corporation, Kalundia Mining Corporation, Inscore Africa, National Foods Holdings, Nedbank Group Limited, Zimbabwe Depository Receipt, Bandega Holdings, Seedco International, and Simbisa Brands. Another kind of markets now, global oil space. Prices rose in earlier Asian trade on Wednesday as U.S. crude inventories were seen falling and on strong Chinese economic data signaling strengthening fuel demand. Brent crude futures gained 7 cents to $84.84 a barrel. U.S. West Texas Intermediate crude was also up 3 cents to $80.89 a barrel. Keeping prices from moving higher were concerns that potential increases in U.S. interest rates could hamper growth in the top oil-consuming country. The U.S. Federal Reserve likely has one more interest rate hike in store to fight inflation. And prices got a lift from an industry report showing that U.S. crude stocks fell by about 2.68 million barrels in the week ended April the 14th. That's according to sources citing American Petroleum Institute. Gasoline inventories also fell by 1.02 million barrels, while distillate stocks fell by about 1.9 million barrels a day. Metals now, gold prices fell as the U.S. dollar regained some ground while investors assess the chances of the Federal Reserve raising interest rates just once more in May before pausing. Spot gold was down 0.6% at $1,993.93 per ounce, and U.S. gold futures also slid 0.8% to $2,003.30. The dollar index was up 0.2%, making gold less affordable for buyers holding other currencies. Expectations are already priced in for a 25 basis point hike, leaving much of the focus on whether a rate pause will be signaled thereafter, and higher interest rates deem non-yielding bullion's appeal. Let's take a short break. When we come back, we'll head to China and back to Africa. So stay with us.
It's engaging.
Welcome back. Still watching Business Incorporated here on Channels Television. We head to China now, where a team from the Nigerian Export Promotion Council, led by the Chief Executive Officer, Dr. Ezra Yakusak, are there in the Hunan province to open up a trade house, a China trade house for Nigeria. Obviously, this is supposed to boost non-oil exports between Nigeria and China. And we do need this expert when we talk about the shortage of FX. But let's have Dr. Yakusak joining us now. I know it's midnight there. Dr. Yakusak, thank you for staying awake to talk to us. How's it going there in China?
Thank you very much for having me on your show. Well, China, it's very wonderful. We had a wonderful program here, the opening of the trade house, the first one in China. And so far, so good. It has been very great and well accepted here in China.
All right, that's good to hear. But I know this is not the first. I know the other time when you were in Egypt, we also spoke to you. You had a trade, you opened a trade house there. How effective has that been to encourage us to embrace this one in China?
Okay, we've had very wonderful reports from not only Egypt. We have Cairo. I mean, that's Egypt, Cairo, then Nairobi, Kenya, and of course, Lome. And China is the fourth one. The essence is, I mean, what exactly is the essence of the trade house? The objective is to increase the share of Nigerian products in these target markets, and of course, to facilitate the growth of non-oil export volume and enhancing Nigerian non-export performance. And, the ultimate aim, of course, is to increase our foreign exchange earning. And so far from the reports we have, because they give us quarterly reports, it has been so impressive. But then we need to do more sensitization for Nigerians to know and key into these various export trade houses. We've had seminars, and of course, if we go back to Nigeria, this one in China, we're also going to sensitize Nigeria on the need to leverage on this and export seamlessly to China.
That would be very important because, I mean, I know Nigeria has a trading partnership with China, but it seems it's more about Nigeria importing their own products, electronics and some of all those components. So it would be nice to have a reverse, especially when we talk about agricultural produce. How do you hope to make this more effective as in Nigeria exporting for that effects that you just mentioned?
And that's more reason why we chose China to set up the export trade house. We're very strategic in our thinking and in our plan. The Nigerian-China trade relations, the fact is that there's a trade deficit against Nigeria in terms of the trade relations between Nigeria and China. Last year, among the top 10 of the export destination we had last year, that was 2022, China was not the third, and China was the third, but export to China was just about 375.18 million US dollars. That is not encouraging if you compare this with what China is importing in Nigeria. And so we need to cope that. We need to change that by increasing the volume of trade with China. This informed the establishment of this export trade house because we need to take more these goods to China. But you see, you can't do it if there is no plan of marketability and visibility of these goods. And that's why we came here in person to China. We set up this export trade house where Chinese will come and they'll inspect the goods, see the goods, and determine or ascertain the standard of that good. Then, of course, make export order as appropriate.
So what would be the strategy, to get more Nigerians, private sector obviously involved, and to get the Chinese counterparts to know them and patronize them?
It's very easy because as NEPC, like I said earlier on, we're going to embark on a massive sensitization program for Nigeria to know what's happening. Because if you don't know, of course, there's no how you can patronize the export trade house. By the way, the export trade house is an initiative of Nigerian Export Promotion Council, but it's also a PPP arrangement with key and exporters that we know, we've had dealings with them, and we trust they can deliver, they can perform. And so for that of China, we appointed Zinap Foods Limited to be the a kind of intermediary in this aspect. So by the time we come back, we're going to embark on a sensitization program, an advocacy program to inform Nigerians that this is happening and that they should key in. I must say this, that of course Nigerian ambassador was here. Nigerian ambassador was here in person. He declared open. And of course, we're also working with Nigerian ambassadors to ensure that Nigeria key in or leverage into this great opportunity being offered by the Export Trade House.
All right, Dr. Ezra Yakusak, the CEO of Nigerian Export Promotion Council. Thank you so much, and we wish you all the best and a safe trip as you come back to Nigeria.
Thank you for having me. I appreciate it.
All right, so let's move on from China back to Nigeria here, where we see that provision estimate from the Ghana Statistical Service in state shows that Ghana's economy expanded by 3.1% in 2022. That's 0.6% lower than the 3.7% forecast by the government. This is below Ghana's average gross domestic product growth rate of 5% pre-COVID. 2019. It met most analysts' forecasts as the African Development Bank in January 2023 had projected that Ghana's economy grew by 3.6%. In 2021, post-COVID-19, the economy grew by 0.9%. According to the GSS, industry contracted due to a decline in manufacturing as well as mining and quarrying subsectors. Gold production, however, recorded a marginal growth for the period. And in other parts of Africa now, we head to Kenya, where the Communications Authority of Kenya and the ICT Authority are planning to roll out 100,000 kilometers of last-mile fiber optic cable in the country's 19 remote counties to increase affordable access to broadband internet. The project is expected to take 3 years and will cost the country about $37 million. That's about 5 billion Kenyan shillings, which will be sourced from the Universal Service Fund, the state's kitty, which utilizes CA license fees and grants to support access to ICT services in the country. Currently, only 9.8 million Kenyans, that's about 9%, mostly living in urban and semi-urban areas, have access to broadband internet. In Rwanda, only 0.9 million people have access to high-speed internet. Burundi, 100,000. South Sudan, 30,000, and there are about 70,000, less than 1% people in the Democratic Republic of Congo. Now, the African Continental Free Trade Area After Business Forum ends today in South Africa. It brought together different African role players in the financing space, private sector and diplomats, on engagement in a bid to unlock trade and investment opportunities under the African Continental Free Trade Area. To date, 54 African countries have signed the agreement as of February the 23rd, 2023. 47 of the 54 signatories have deposited instruments of ratification. AfTA is expected to create the world's largest single free trade area with 1.3 billion people and a gross domestic product of $3.4 trillion.
On our way to creating the world's largest single free trade area with 1.3 billion people and a gross domestic product of $3.4 trillion. This represents an important step, a step forward which must culminate in the ratification of the African Continental Free Trade Area instrument by all African Union member states. The implementation of the African Continental Free Trade Area will improve intra-Africa trade, the continent's share and participation in global trade, stimulate and improve her economy, as well as contribute to lifting millions of people out of poverty. At present, the quality of much of the continent's maritime roads and railway infrastructure is less than satisfactory. There are few road links, general poor roads infrastructure maintenance, and a limited regional road linkages throughout the continent's 5 regions. Yet, roads are the predominant mode of transport on the continent, carrying approximately 80% of goods and 90% of passengers. Without infrastructure, rail and maritime, trade cannot realize its full potential.
Well, that's it there. And after, obviously, a profitable platform for Africans, hoping that a lot of the countries in Africa will make the most of that platform. Well, that's it on the program today. Business Incorporated. We'll do this again tomorrow. God's grace. I'm John. Enjoy the rest of your day.